Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Thursday, October 27th, and it's about 11:30 on the West Coast. And for the first time in a while, I don't have to fake a smile when I do a video for you guys because mortgage rates actually had a pretty good week. Last week when we spoke on Thursday, we were at a 20-year high, all the way up to 7.37 according to that lender survey. And today, as I speak to you, we're at 7.04. So about a third of a point over the last week. So obviously we'd like to be a lot lower than 7, but a third of a point in a week is nothing to laugh at. So that's great news. As far as how long that rally will last, well, we might come to an end tomorrow, but we'll see. Let me share the screen with you guys. So you guys have seen this chart before. It has to do with inflation in the different months. But tomorrow we're getting the PCE, which is the Fed's favorite form of inflation. And they like that core rate, the one that strips out energy and food. This is CPI, but I wanted to show this because it's pretty similar, and I couldn't find an updated PCE one that I like the graphic of that I thought was clear for you guys to see. So tomorrow we're getting the September number. We're in October, but we're always a month behind. So September, just like August and July, we're all really low numbers. And a couple of weeks ago, when we got the CPI number, the markets had their negative reaction to it because it's going to go up. Since that number's so low, we expect it to go up. They expect the core rate on the PCE to go up from 4.9% to 5.2%. And now the Fed has talked about they want to get that core PCE number down to about 2%. So that kind of gives us where we need to go, about 3.2%. Looking at this chart, though, like we talked about before, and once we get past these September numbers, so once we get those October numbers and going forward, those numbers were all a lot higher. So we should start seeing them come down when we get lower readings based on these Fed rate hikes they've done, the economy slowing down, inflation coming down, and so forth. So we'll probably see a little bit of as we go into the end of this year, we'll see things start to taper off, and then we're hopeful that at the beginning of the year, that's when we really start to see pick up speed and see them maybe get down maybe into the mid fives to the low fives, depending on how things go. Another important thing coming up next week is the Fed is having their meeting on November 2nd. And what we priced in, what everybody in the markets has been thinking for a while now, and what the Fed has basically communicated in all their little talks, is about a 75 BIP increase, about 3/4 of a point. And then also December 14th, we kind of expected the same thing. Based on some, cracks in their resolve amongst the Fed and members, as they given their talks, it sounds like they might be backing off. Maybe we'll see a 75 this time and 50 next time, and then maybe they cool it. They've gotten a lot of pressure from international community, from the UN, because what we do here definitely affects the rest of the world. And even domestically, I know yesterday there was a letter penned from Senator Brown out of Ohio that basically was trying to remind the Fed that they have two mandates from Congress. They are supposed to keep inflation under control, which they're trying to do, but they're also supposed to keep employment healthy. And if they get too crazy on this inflation stuff and they raise too much and we go into a deep recession, then obviously that's going to negatively affect employment. So it's good to see some pressure on them, and maybe they back off. Maybe we see them, like I said earlier, maybe we see them stop their Fed hikes after December 14th. And that obviously would, have a positive effect on mortgage rates. And we could see maybe more of a rally and get back down to a more reasonable rate where, buyers and sellers and everybody, sellers don't mind taking on a new rate to move out of their house, and first-time home buyers can afford their new payment and can qualify. And, that would be great for everybody. The last thing I want to show you guys real quick, little humor. So with, the way things have been going in the mortgage industry, you see a lot of memes amongst us loan officers about our pipelines. Our pipelines are the loans we have going. So this is the most PC one, the one I felt safe sharing, but there's a lot of pretty dark ones. So my pipeline is the dinosaurs, and these rates is the asteroid that came and killed all the dinosaurs. So, hopefully over, as things go by, we'll see things start to improve, and I don't see any of these memes anymore where, my community is a little bit more fatalistic and seeing how things are going. But, like I said, looks like we had a nice little rally. Hopefully that continues. There's still people doing loans. So if anybody has any questions, needs any help with the borrower, some creative options, there's always those out there, and I'd be more than happy to help you guys. Hope you guys have a great day, and we'll talk soon. Bye-bye.